Hi guys, welcome to Investing with JYK. And today is going to be a fairly short video on a financing event on Secoo. So you probably know I don't like this company, so take what I say with a grain of salt. I don't know anyone that uses it personally. So recently they had this news release that after it was released, the price went up quite a bit, I think. So let's try to unpack what is involved in here. So you got a US 175 million convertible note investment from Blah and JD.com. Okay, so let's first figure out how much money they have at the moment. You can see, I'm just going to go to Seeking Alpha, but you may want to go to the source. But here you got easier access if it works. Yeah, it works. Okay, so what they have is about 70 million in cash, and total asset is about 325 million, and total equity is 205. So that's a fairly big infusion of cash. But if you look at what is in here, it's a convertible note, not equity investment. So what's going to happen here is the cap table, the balance sheet is going to look like cash is going to increase here, increase going to by 125, and then you got a long-term debt of 125, and then there will be some conversion value based on a some kind of model. So that's going to be an estimate of how much the conversion value is. Now, these two companies are fairly reliable in the sense that pretty reputable. This L. Catterton Asia controls brands like Louis Vuitton, I think, and some pretty high-end brands. Let's see. Well, leading consumer growth, it has select consumer lifestyles, leverage strategic. It actually doesn't control. It just has some relationship with LVMH, which controls Louis Vuitton, and a bunch of other brands. I think Prada, they also. I'm not sure if they control Prada, but in any case, so they this L. Catterton thing should is a retailer, I think, and what did they do actually? Let's see. From proprietary design origination is specific due diligence opposed to opportunity value-added portfolio companies. They're not actually yeah, they're not too much of a retailer. They do operate some malls, so, but they might convince LVMH to sell through Secoo, but we don't know yet. In terms of JD.com, it started off as a computer retailer in like an offline computer retailer, and it's trying to get into the fashion business, but because its origin of like a computer retailer, then it's having a bit of hard time getting into the fashion business. And you probably know JD anyway, so I'm not going to spend too much time on it. So the most interesting thing on this deal is how it's structured. A convertible note is really two parts. You got the bond component, in which you have a principal and a interest payment. Right? These are contractually guaranteed. As a company, unless you go into bankruptcy, you have to pay the principal and interest when they come due. And the second part of it is the conversion, which is really a long-dated option. In this case, more like a long-dated warrant, not really an option. An option really is usually when people say an option, it's on the secondary market, and a warrant is a long-dated option that you buy from the company. So what JD and Al Catterton obtained was a protection on the downside that whatever happens, so long as Secoo doesn't go bankrupt, they will collect their principal plus 8% dividend, 8% interest. Here we go. That's 8%. 8% is very hefty. It's quite hefty if you think about this. To give you an idea, Tesla, when they issued their convertibles like 2% or something, and usually convertible notes have a lower interest rate than a straight up bond because of the conversion option, the option value, right? So basically, usually the lender would accept a lower interest payment for more upside because of the conversion feature. When the company does really well, you get to participate in the upside, in the equity part. And if the company doesn't do well, then you still collect the interest and the principal. So a junk bond, when is this thing due? Let's see. This thing is, let's just go through this entire thing. It says, we'll subscribe for a convertible with principal amount of that, convertible into a certain number of Class A ordinary shares, and holy mothers. It's even worse than what I see. And so on top of the convertible note, there's also a warrant that's issued to Al Catterton to purchase from the company another more of the shares. So 500,000 shares. How many does this thing have? Let's see what the potential dilution is. So 492.92 divided by 11.49 million. So 37 million. Okay, so that's not too bad. So they have 37 million shares outstanding. And this thing potentially will add 500 to that. So 0.5 divided by 37. So 1% dilution. That's not too bad. So a potential 1% dilution. Two of which represent whatever the principal outstanding until the third. Holy my god! So 3 years bond at 8%. That is already much worse than typical junk bond, right? So junk bond yield curve. Let's see what they have. Blah 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 blah. Yeah, this doesn't tell us the actual junk bond yield by maturity. Tracking this, maybe this will tell me? Let's see. Let's see. Long high yield. Okay, here we go. High yield constraint. No, doesn't have any. Corporate debt. It's nothing. Damn it. Okay, let's find a junk bond, right? So Tesla bond 2026. They have a bond from 2026. 2025, yes, 2025. Actually, 2025. 2020. Yeah, this one. This is how much they paid. 5.3%. Okay, so they obviously now it's more because it just got downgraded. But when it was issued, it was 5.3%. And this doesn't have a conversion. The equivalent Tesla, the convertible note was like 2% or 1%. So this guy has and this thing is due in 2025. This thing was issued last year, I think. So that was like an 8-year bond for 5%, 5.3%. This is a 3-year convertible bond for 8%. It's some crazy terms. I don't know why they're taking this. Anyways, so yeah, so basically this thing will keep compounding at 8% per year until the anniversary of the closing of the transaction. All such earlier times such as notes are repurchased or converted prior to this. So basically, unless it's converted, it's 8%, right? So let's see what the conversion does. Subject to payments are blah, 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 blah. So that doesn't really matter. The transaction will have a right to appoint a director as a closing so long hold the 5% total issued shares thereafter on a fully directed as converted basis. Okay, so not only these guys lent to them, so the JD and L. Catterton lent to Secoo at a just an egregious rate. They get to sit on the board without having any equity exposure. What are they doing? They basically sold the, I don't know, what did they say? They sold the house and sold the farm, or what they say? Sold the barn, sold the farm, so they sold everything. They gave away everything. But so concurrently with the entries of convertible notes and warranty subscription agreement, blah blah blah, have entered into business corporation. Okay, so that's good at least. We also just supported on a range of initiatives, including enhancing the presence for whatever. So okay, so L. Catterton will try to help Secoo in some way. So that was it. And we know this, it doesn't say what the price of the conversion is, right? So we don't know. Yeah, there's nothing that in here that says the price of conversion, but we know it's at least 5%. Because, you know, this is us converted, basically us converted if they would hold more than 5%. So what is 5% of this company? 5% would be what? 429.9. Obviously, this thing, I'm doing 0.5, but this is not entirely right because I'm not doing it as fully diluted. Okay, so that's $22 million. We have no idea what exactly they're giving away, but it's safe to say that Secoo is paying a shit ton for this 175 million investment, and essentially the help from L. Catterton. We don't know if L. Catterton is going, how much is L. Catterton is going to help them, but this is a really shitty deal, just from a financial point of view. Maybe, you know, L. Catterton says, oh, they're value add, right? So they say something about here, it says, blah, 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 blah. Singapore, blah, 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 and it says strategic with Azure across entire from proprietary deal origination. So that is one thing. Industry specific due to whatever to post investment operational value add to its portfolio. Okay, so how much is Seiko paying for this part? I think this is what they really want, this post in investment operational value add. Okay, so we can think about at least, interest rate. You can think of it in terms of interest rate. The 3-year convertible on Tesla was like 1 point something, 1.5. So they're paying like 6% for the privilege of being helped by L. Catterton. I don't know this company. They may be fairly legit. I have not looked into their holdings. But yeah, I think it's a shitty deal. I almost think they're either desperate for money or they're desperate for help on the operation side. And that is all from me today, and hope to see you next week.